into the trading week. It is May 11th, 2014. Plotted before you is a 30-minute NinjaTrader chart with the euro dollar shown in the candlesticks and the Franklin dollar index, which is shown using the black line on close. And the instrument of choice for this technical analysis is the Franklin market gauge. And examining what's currently on the charts, the Franklin market gauge is currently has a sell signal triggered, which is essentially telling us to go short on the primary pair and to go long on the secondary pair. And our primary pair is the euro dollar, the secondary pair is the Franklin dollar index. But given that the Franklin dollar index is a measure of US based currency pairs, the performance, we would expect that these two instruments to have a negative correlation, which the chart does exhibit such. So given that the negative correlation is relatively strong between these two instruments, we are going to primarily focus on that aspect of the trade. So we're just going to examine whenever a signal is given, we're just going to focus on the euro dollar side of that trade. So going back to last week, the last sell signal, the last signal was a sell signal, and as you can see, we are currently the euro has slumped against the dollar, and this signal is still valid as we head into this week's trading. And it appears that there might be some uptick here, but the euro is currently facing some a key support and resistance area that was last seen in mid-March and in mid-February. If this area is breached, then the next target is 137, which was also last seen in early April, mid-March, and the end of February. So currently the Franklin market gauge still does have a valid sell signal, and looking back, we can see that the Franklin market gauge has been pretty accurate in naming the key reversals with the euro dollar against the Franklin dollar index. So there was a couple of short trades between the two instruments, and the last long signal that we received was at the beginning of May, and this trade ended up going for a substantial amount of pips before reversing against the Franklin dollar index. So as we head into this week's trading session, it's important to recognize that currently the euro is still under statistical pressure, but given the move was pretty drastic, it's not surprising. It won't be surprising if we see some sort of a pullback or reversal with the euro before likely heading lower if another reversal in the market gauge is not triggered. So that is it for today's technical update. Thank you.